All right. How's it going, guys? I am going to talk about Dogecoin and what has been going on with it and whether it's a good investment. So, I've got a Motley Fool article pulled up, and we've got Elon Musk coming on Saturday Night Live tonight, and there's all these expectations. And I've had so many people reaching out to me and asking me, is this a good investment? Should I be buying up all this Dogecoin? And my gut reaction is to say, no, hell no. Why would you do that? But I don't want to just discount something because you could have said the same thing. And that's kind of what people have been saying is, oh, you could have said the same thing about Bitcoin like 5 years ago or Ethereum a couple of years ago. And so I want to make a logical argument as to why this is different. Do I think it's a cultural zeitgeist and kind of something really interesting happening? Absolutely. It's definitely interesting. It's wild that it's happening. I mean, it's not unassisted. It's kind of pushed along by some very famous people, including Elon Musk and Mark Cuban accepting it for the basketball team. And there is a lot of momentum, but I really don't think it's much different than the GameStop thing and the AMC thing. And it's easy to discount all these things. And I was quick to discount the GameStop thing. This is stupid. This is ridiculous. GameStop, doesn't make any sense. But then it's okay, there are catalysts. Michael Burry had a good logical reason why GameStop should be worth more than it was. And Ryan Cohen from Chewy was joining the board, and he was getting people out of the company that were not wanting to change the company and make it more adept into the 21st century, and take advantage of where it's positioned in the gaming world. But you have to ask yourself, was it worth $400 some dollars? And is Dogecoin really meant to be over the market cap of Boeing? Something that actually produces airplanes and value. And I mean, you can argue well, Bitcoin's the same thing. It's created thin air. Bitcoin is a store of value. And one of the arguments is Bitcoin will only have 21 or 22 million Bitcoin ever. And so as long as there's kind of this maintained idea of trust, and there's money going in, and it also has that the blocks, as it's being mined every so often, it becomes harder to mine it. So there is this forced scarcity. Ethereum is this platform that all these things can be built off of, and can have, I think, will be worth more than Bitcoin because all this value can be built on top of it in this open source. You've got NFTs, you've got decentralized finance, you've got all this stuff. Does Doge actually add any value to the system? I think you can argue that Doge could be more of a currency than Bitcoin is, because I don't actually think that Bitcoin will be much of a currency, at least until the last Bitcoins are mined and it's going up in value. Because why would you spend something that's increasing in value? But why wouldn't you just use a stable coin if you're going to transact something? I mean, if Doge is going up in value, why would you spend it? So I don't think a lot of people. Mark Cuban experimented with the Dallas Mavericks in accepting Bitcoin. He said hardly anyone paid for it. No one wanted to spend the Bitcoin. He said $200 total were spent in Bitcoin for tickets. And I think the same with Tesla. It makes a big deal. It gets put in the newspaper. Tesla's accepting Bitcoin. No one's going to buy a car in Bitcoin hardly. Why would they? Because if it could double within a few years or something, why would you spend it on a Tesla or a car, a depreciating asset? So I think it's just the novelty why Dogecoin might be added as a payment system. It really just adds extra layers into like something that works already, which is like, I mean, we have efficient ways of paying. That's not the problem. Bitcoin, the thing is like, okay, money is depreciating. It's a store of value. And I think that is a good argument for Bitcoin. I don't think it will be used as like a way to exchange money anytime soon. So this is off of the Motley Fool, and this is an author's reasoning as to why Dogecoin is a poor investment. He compares it to GameStop and AMC. And I really think it is like a cultural zeitgeist moment. It's very interesting, and memes are used to advance like this narrative. And I actually think I thought it was like terrible for crypto, and it may get regulators looking tighter at crypto. I'm sure it will. But it's kind of like an on-ramp for like people that they don't understand DeFi. They don't understand. NFTs have been an on-ramp because that's actually more understandable. It's like, okay, art that is like a one-off and in a digital form. And Dogecoin is kind of that. Like in the Renaissance, there was actually memes used to kind of attack the church and the status quo of like the middle of the Dark Ages. And it's kind of like this giant middle finger. It's this, okay, if you look at GameStop, AMC, you look at the whole thing that happened with Robinhood and the companies that were shorting GameStop, and then you look at Dogecoin, it's all kind of like, okay, the common denominator is like this lack of trust in the system and this giant middle finger. And I don't think it'll be sustained, just like GameStop didn't stay up at 400 and something. AMC didn't stay up. I would not want to have my life savings in Dogecoin. I mean, is it fun to throw a little bit in and say you're a part of the movement? Sure, whatever. But I mean, people buy lottery tickets. I don't think it's smart, but like, yeah, you have a right to do that. But I get sad when I see someone like, get their whole paycheck and they have kids to feed and all this, and they're going to dumping their whole money into like all these lottery tickets, and they're like, they look depressed every time, they didn't win. So just be careful. So this is kind of a couple points as to why Dogecoin may not be the best investment. It's an extremely limited. It has extremely limited utility. There's virtually no real-world use for the tokens. According to online business directory Cryptwork, in the neighborhood of 1,300 businesses now accept payment or tips in Dogecoin. Meanwhile, only 48 companies took Dogecoin as payment 6 weeks ago. So it has gone up from 48 companies to 1,300, but a lot of that is just like, okay, this is like huge in the mainstream, and maybe we can attract some people to come to our company. We'll get a free press release by just saying we accept Dogecoin. All in all, it's nothing. It's a drop in the bucket compared to total businesses. So you'd have to see this continued acceptance to really like continue that narrative. It says neither figure is very high when you consider that the U.S. has more than 32 million businesses by itself. There are estimated 582 million entrepreneurs worldwide. So currently, it's still a novelty currency that really doesn't have much of a use. This is the biggest thing to me, is that it has an unlimited supply, whereas Bitcoin, you have about 21 to 22 million coins ever. And as it's being bought up, as more blocks are being mined, it's getting more constricted, and that block size the block reward gets cut in half every so often. So if you mined a block, so you got 16, after a certain amount of time, it drops to 8 Bitcoin, and then 4. And so it's you've got scarcity built into this. Ethereum had no cap as far as like the amount of ether that could exist. With the move to Ethereum 2.0, it will actually burn ETH as ETH is spent to do transactions. So you actually, without having like a hard cap as far as how many Ethereum there are, you have this burning of the currency. And so it's kind of another way to have this limited supply. The opposite is true with Dogecoin. So it works on proof of work, which is what Bitcoin works on. And Ethereum is actually moving over to proof of stake, which is where people are staking Ether as collateral. And that's kind of a way a lot of new cryptocurrencies are moving towards, especially as it takes all this energy to do mining. So it works on proof of work. So people are mining Dogecoin to get it. And so they're actively putting more supply into the system. It means crypto miners use high-powered computers to solve complex equations to validate groups of transactions known as block. For doing so, they're given a block reward, which currently equates to 10,000 Dogecoin, worth about $2,500. So he says this is where things get interesting. A block reward is handed out every minute. That's 600,000 new Dogecoin every hour. So 14.4 million new tokens every day. So that means 14.4 million tokens have to be sold every day in order to just keep Dogecoin worth the same price. So it's like running on a treadmill. And the US dollar is being inflated. More are being put out there. And Dogecoin kind of has the same problem. And the only reason it's going up is because more Dogecoin is being bought than is being mined. Bitcoin can just stabilize. Like, no one else could buy Bitcoin and the price would still go up because of the halvening. Well, you still have to have mine. The halvening is based off of how much is mined. But it doesn't go down because there's not just new Bitcoin being created all the time. There's no supply cap on how many Dogecoin can circulate. With 129.3 billion Dogecoin already in supply as of this past weekend, investors are constantly seeing the value of their holdings diluted with each new block reward. So, I mean, you can gauge, like, do you think that's a good investment if it's going down in value? And you really have to ask yourself, like, what problems is Dogecoin solving? Are there other coins that are doing the same thing? Bitcoin is kind of viewed as like a digital gold. Ethereum has this platform element. There's utility tokens that they're serving some usefulness. And Dogecoin is just supposed to be a way to pay. But even the people that created Dogecoin said it was a joke. So it doesn't seem to really have a differentiation besides short-term acceptance and social media pumping. If you look at its backstory, in 2013, it was created by two software developers, Billy Marcus and Jackson Palmer, and they came up with the idea of combining two of the buzziest things on the internet at the time into one. They took the extremely popular Shiba Inu dog meme, and after 3 hours of writing code, 3 hours, turned it into its own cryptocurrency. Not too long after creating Dogecoin, they stepped away, leaving community developers to fill the void and ensure that the lights stayed on, so to speak. These multiple years without true development left Dogecoin without much differentiation. This is to say that it's no different than dozens of other tradable cryptocurrencies. He says it has no fundamental catalysts. Tesla bought 1.5 billion in Bitcoin, and they said they would accept Bitcoin for the cars. There's lots of banks and all these institutions moving into things like Bitcoin and Ethereum. The catalysts with Dogecoin, there are catalysts. I mean, it's being hyped on social media. It's on TikTok. It's on Reddit. I mean, there's like this essential equivalent of Wall Street bets pumping Dogecoin. You've got Elon Musk tweeting about it, but is he buying it? Like he's putting it on the balance sheet of Tesla. He's putting Bitcoin on the balance sheet of Tesla. I would look at someone's actions and not their words. I think he just thinks it's a fun thing and a fun game. And I really wouldn't be looking to Elon Musk for investment advice. Like, I think he's a very talented engineer and business person. But, I mean, I think he's just having fun. And, I mean, I own a lot. I own Tesla stock. And it kind of makes me nervous that he's running around, like, pumping what could be deemed securities. But as far as like whether that can negatively affect Tesla, but I don't see him buying it and putting his own assets into it. So, I mean, I really, and I don't care if he was buying it anyway. Like, people need to do their own homework and like look at why is this having value? So I personally wouldn't be putting any of my money into it. I have 2 Dogecoin, which is $1.50 about. It is up like 60%. But I don't have any plans on buying more. I bought it as a joke, like just to keep track of it. And I don't have a fear of missing out on something. Like, I get excited. I'm excited because I bought Tesla at $250 a share pre-stock split. That excites me because I discovered value in the market when other people didn't like think it would be a thing. And I like found something hidden and it went up. Then they did a stock split. And now like I'm up 1,200% on my investment. But I mean, getting into like, I missed GameStop. I got 2 free GameStop stocks when I joined on Robinhood, and I got somebody else to join. And I was like, oh, I don't want this. Like, I sold GameStop for like $3 to $5 a share or something like that. And I sold it to somebody else. I mean, I bought something else with it. I mean, I don't know. I don't know what I put it towards. Okay, yeah. Those 2 shares, let's say 2 shares of GameStop at its peak, I would have turned about $6 into about $800. Okay, like that's cool. I mean, sorry I missed a pump and dump. Like, I don't care. Like, you're not going to catch everything. And people that sit there and watch like Robinhood and they watch all the stuff that's trending up, I don't like that Robinhood even has that. Like, you go into like search stocks and you see everything that's pumping like 30-40% for the day. And it does. It gives you this FOMO, fear of missing out. And you're like, oh God, I need to get into that. I need to get into that. And if you sat there and chased all the stuff that's gone up 40%, you'd be in bad shape. I mean, you'd be better off going through what's dropping 40% and like who the losers are for the day probably than buying all the stuff that's going up. Really, when you're in investing, I mean, you don't want to actually just buy the losers because a lot of times there are reasons they're dropping. But when you're an investor, like right now, stocks look terrible. Crypto looks awesome. Guess what I'm not buying right now? A lot of crypto. I still think it has a lot of room to go. A lot of, I actually, if here's something you can do is go on Google Trends and you can type in a couple different things and measure how they stack up against each other. Type in Ethereum and Bitcoin and then extend the window out. Like, it automatically is like 12 months. Extend it out like 5 years or so. And you can see that dramatic spike in 2017 when you had the ICO offerings like You had all these coins coming out. You had Bitcoin pump up to about 17,000. And it kind of, to me, that's like people searching. It's people's search results. And to me, that's kind of like a greed meter. Like, you see it pump up to 100 on Google's scale during that time period. And you see it now, and it's like a quarter of the way. And I don't think there's near enough greed in the market yet. Like, there's this cycle every so often for Bitcoin, Ethereum, and cryptocurrency. And I think we still have a long way to run. I don't think we have near enough greed. I think if you typed in Dogecoin, you'd see that's like peak greed. With I predict it's going to drop after this SNL thing, because I think that's a huge catalyst. There's this buildup of, oh, Elon's going to talk about Dogecoin on SNL, and I don't really see anything crazy that could top that. This like huge pop culture event after that. So I think a massive amount of crypto traders have a sell query or a sell command set for $1 or something. They probably have some specific price target set for around when this SNL thing happens. Is they're probably going to dump it. The price is going to plummet, and anybody that's still holding on is probably going to get screwed. I mean, it might come back. It'll probably come back somewhat. Who knows? I don't care. But I think crypto in general has a long way to run still. But I'm actually looking at the stock market right now. Like, a lot of my favorite tech stocks I did extremely well in the pandemic. I was up I'm up like 300% for the year. That's kind of including crypto. If you don't count crypto, it was about 200% on my stocks. And then you had this big sell-off in the NASDAQ and a lot of like stay-at-home stocks. I mean, I've been wanting to buy like stuff like Peloton, especially with this whole, like, I think they hit rock bottom this past week with their recall on this treadmill. But there's a lot of good stuff. Fastly, a lot of these stocks are just getting killed right now. So you're having this migration as people, like all these kind of YouTube pumped stocks, TikTok, all these kind of trendy things. People are pulling all their money out of like ARK Invest kind of stuff. And now they're dumping into crypto because crypto is doing it, having a big moment. And I mean, and also value stocks are having a big moment. So you're just having this big rollover in where people have their money. And usually it's the place where people don't have their money where you want to be. I've seen like a 40% drop in a lot of these tech companies. And so unless like something is dramatically shifted in your thesis on these companies. I mean, if you really thought like Peloton's incident with this treadmill was game changing for the company, yeah, then I might get out of it. Or you thought, okay, Apple, I don't think they have any more innovation in them, maybe get out of it. But if like I don't chase cycles, and when a company I really like is out of cycle, that's when I want to be getting in it because it's cheap. It's on sale. Uh-oh, my bank fell off the punching bag. It's on sale. Like, that's a good time to get into it. So I actually, like, I'm kind of, if I had like two monitors up, I'm monitoring crypto and I'm putting stuff into assets I think are really good on there. But I'm really looking at tech right now, and some companies have just been beaten down because things were so frothy like months ago, and you had everything just peak. And finally, and I was like, man, I can't justify like buying much right now. And finally, I feel like I can start looking at some companies again because their valuations have dropped dramatically, and everybody's freaking out about interest rates or what the Fed's doing. So I would say, I hate to even go back to this Doge thing constantly, but I think it's just a distraction. I think it's just the shiniest new thing. I think it has a lot of cultural purpose. I'm not knocking that it's fascinating. People will be talking about it for years to come, but they'll also be talking about like how much maybe they lost because they didn't sell it while they could have. So I wouldn't have my money in it. And if you do, I'd take some profits for sure, and I'd probably sell after tonight. See what happens with that weird thing that's the SNL thing. What Elon's going to do. I think this thing says it has no catalyst. I think it has a huge catalyst right now. And once this catalyst is behind it, I don't see any further catalysts. What's going to top that? And it said even its co-developer, Dogecoin's co-developer, is taken aback by its valuation. It says, if all this is still not enough to convince you that Dogecoin is an awful investment, way to mince your words, listen to what someone who might know a thing or two about Dogecoin had to say. The co-developer. This week on Twitter, Marcus, who is no longer involved with the development of Dogecoin, told me that he likes the coin and it's worth whatever people buy it for. But in an interview with the Wall Street Journal following Dogecoin's ascent to 8 cents earlier this year, Marcus proclaimed the idea of Dogecoin being worth 8 cents is the same as GameStop being worth $325. That was at 8 cents. Now it's at like 60 cents. It doesn't make sense. It's super absurd. The coin design was absurd. Dogecoin may have partially outgrown its meme status, but it's always be that digital currency found as a joke that lacks the differentiation and utility to be meaningful in the real world. So crypto is, I think, the biggest. My prediction is that blockchain is like the new internet. Fused with the internet, blockchain is like kind of the completion of the journey of the internet. The internet was supposed to be this giant collective of like everyone could do all these cool projects and be decentralized and all this stuff. And really what happened was you had like 4 companies come in, gobble up all the bandwidth on the internet and be gatekeepers. You've got Amazon Web Services and Amazon, the store, the e-commerce. You've got Facebook, you've got Google, and they've just portioned up the internet and they control the levers of it. And I think blockchain has the potential to decentralize all that. I mean, you do have private blockchains, and the banks and private investors, they're trying to find a way to get their grubby hands in there. And I think that's why it's so important for stuff like Bitcoin, Ethereum, maybe even Cardano, some of these other projects that are decentralized to really be the dominant ones, and for people to build on top of those and not these blockchains that are trying to be less decentralized, more centralized. I think it gives people the opportunity to work for DAOs and make money like independent of companies. DeFi has huge potential. NFTs have huge potential. But there's a lot of just garbage being pumped out there. And there's a lot of things that have no utility, no purpose. And it's just like anything, there's going to be scam. I'm not calling the Doge people scammers. They did it as a joke. They said it was a joke. It just caught on as this meme. But you've got scammers now going around like trying to pump stuff on all these different like shit coins, and for the sole purpose of just pumping a price. So you just have to have like discretion when you're investing in all these different things, and look at what you're buying and evaluate it onto all this different criteria, and just learn. Education is how you don't get ripped off. And whether it's don't buy something because someone tells you it's a good thing to do, and just get on. I'd say go to Coinbase. something like Coinbase or Kraken is a good way to start educating yourself. So they have resources. I know it's centralized, but it's kind of a centralized platform. But Coinbase thoroughly vets the coins that are on there. That's one thing I really do like about them. They don't just add things just to add them. They make them apply to be on there, and they evaluate it. You can look at the white papers. You can read up about every different project and see like what their intention is for that coin. The white paper just tells you the intention of the coin, but then you have to see like what is the adoption of this. So how many people, and you can see a lot of that stuff on sites like CoinGecko and CoinMarketCap, but you don't want to just buy things because they're on CoinMarketCap, because you want to agree with kind of the mission of it on the white paper, and then you want to see, is this being massively adopted? Because things do start taking off when you get that network effect. Dogecoin does have that network effect going for it, but you got to look at the underlying fundamentals and say, it can have the network effect, but things have had network effect before and they didn't provide usefulness and they collapse. So that's where you kind of have things drop off. But the crypto space in general as a whole is looking really good. I follow a lot of the news in the crypto space, like CoinDesk or Cointelegraph, and there's just so much going on in space. I'm very optimistic. eBay is looking at it's exploring NFTs and possibly crypto payments. You've got all these banks getting into stuff. One thing I've been looking at recently is how to make some passive income in some of these different crypto projects. I've got actually something coming to my house right now from a coin called Helium. It's on Emirate.io, and it's mining these things called Helium tokens and creating an Internet of Things network that can pay me and make money for me. The easiest thing to do is to stake crypto. I mentioned, like, I did an interview on one of my podcasts a little while back with a guy that was mining it. And I was looking into mining crypto, and it's just used a lot of electricity, and it seemed like more hassle than I wanted to deal with. But I realized that most of the crypto is starting to move to from proof of work, where you're mining it, you're putting in work in order to get crypto, to proof of stake. Proof of stake is where you put up collateral and you actually get crypto rewards based off of operating as like a node in the network. I don't fully understand how it works, but you essentially are like getting rewards just as in mining, but just by having it up there. And it's not as energy intensive at all. Like I think that's actually the biggest threat to Bitcoin, is that there's become a better way, which is to just have collateral up instead of doing this huge energy intensive mining. And so I think Ethereum, in my perspective, could very well pass Bitcoin because of just all the use cases and the fact that it doesn't need to be mined using all this energy. It just creates a lot less friction and has, I think a lot of companies are going to want to use something that they're not worried about screwing up the environment, and there's an answer. Like if people are like, oh, I heard crypto screws up the environment. It's like, well, I mean, yeah, the mining is usually located near like alternative energy sources or blah, 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 blah. But we don't even have to do it that way anymore. There's other ways to do it. And it's actually easier to participate in proof of stake than it is to participate in proof of work. And so I have Ethereum staked in Coinbase, and I'm actually earning 6% interest off of my Ethereum that I have locked up. They just made that you have to get on a waiting list. I don't know how long that takes. I was on it for like a month or two. So now I am staking Ethereum 2.0 on Kraken. You can go into all these different cryptos, and you can stake like Flowchain or Cosmos or some different Polkadot, and you can make money in that way. This is talking about this is on Block Social. It says blocksocial.com/earn passive income in crypto. It has 10 ways to earn passive income with crypto. If you want to look further into that, I'll do a whole episode on this sometime and just talk about all these different ways to maybe set up some income sources for yourself. I've been looking at this. This is an article on why I quit my job to work in a DAO. A DAO stands for Decentralized Autonomous Organization. And so I think in the future, we will not have companies run by people. We already have companies on the blockchain that are run by code, essentially, and act as a cooperative. You can vote on things, and you can contribute to what's called a DAO and earn coin rewards and cash that in for real money. So I think this is incredibly interesting. I have this article pulled up, and I have got to do a lot more research on this, but it is fascinating to me. Like some examples of this on like Coinbase or like MakerDAO is so Maker was set up to run a stable coin, which is called their stable coin is DAI, DAI, whereas a lot of the stable coins, meaning it's like backed, it's locked into like say the US dollar or the euro or some fiat, and it stays at the same price. That's essentially what it means. Well, Maker mints DAI, which actually most of these stable coins are actually backed up to physical dollars or gold or some asset in the real world. DAI is actually backed up algorithmically to the blockchain, and it locks itself up to and stays right at about $1. And it is managed, essentially has like its Federal Reserve, which is Maker, and they had a foundation, and they just actually let that go in as a DAO. So it means it is autonomously run now. And I think that's really cool. And you're actually having these crypto organizations start, then they'll create it as a decentralized organization, because even having a physical organization is kind of against the ethos of blockchain. And once they really get it going, they'll set up a way for it to self-fund itself, and then they'll just release it. Uniswap is kind of that way. I think there's CurveDAO, that's a automated market maker, and Uniswap I think is still run by an organization. They've got like employees and stuff, but they could create a DAO out of that and release it. And Uniswap is kind of like an equivalent to Coinbase, but instead of being centralized and being this exchange where you get crypto through like a company, they have kind of like released it as a self-run line of code almost on the blockchain. That's probably not the best explanation.